If you make it or break it in self-storage completely depends on your ability to get your market analysis right. What's up, everybody? Today, I'm going to show you the tool that you need so you do not fail at self-storage investing. We don't want to be lucky. We want to be good. And that's what market analyzing is all about. We are going to walk through the 3 critical steps. First, being the market. Meaning, what is this market currently doing? Is it growing? Is it decreasing? Is population going up? Incomes? What's happening? Second, the industry. The industry is self-storage. How many storage facilities are there? What's happening? Third, utilization. How are customers utilizing the industry or the assets in that market? And that brings it all together to paint the picture of market demand and really gives you a good idea when you're analyzing self-storage markets. All right, this tool that I'm using is called Radius Plus. They're a great company. They're a lot like Yardi and others. They aggregate self-storage data. Through this tool, we can look at individual markets, we can look at self-storage facilities within those markets, and we can see better what's happening as we analyze them. It's important to notice that these tools can be very powerful. They have a lot of information and you really need to use them properly. It's also important to know not all of the information is within this tool. So it does have its bounds, and nothing, absolutely nothing, is better than on the ground work when it's paired with technology. To measure demand, the first thing you have to do is look at the market. Generally, I have to understand the theme of the market success. What's going on? I need to understand risk, and I need to look how those things are represented in the numbers that it produces. Let me share with you an example. I've already invested in Reno, and Reno has a little small neighborhood, little sub-market of it that I absolutely loved. I really bought into the greater idea of this market and what's happening in Reno. What's happening in Reno is that as California grows, gets more expensive, people are moving there. But also, businesses utilize Nevada's taxes and service California from Reno, creating an explosion and a revitalization of this city. When I drive down into the micro or the sub-market that I'm looking, you need to remember that self-storage is a 3-mile radius, right? It's a short, small, micro setting within that overall market. We're really trying to pin down 3 to 5 miles. Now, as you get more rural, that expands. And as you get more urbanized, it can shrink. We're talking about population density within that range. So for here, I'm comfortable within this 3 miles. And what I'm looking at is growth projections. I'm looking at population growth at 1.5%. It's growing really, really well. The projected income growth is growing at 2.58%. That is great. We're seeing population and income growth. People are moving in, they're making more money, they're utilizing the assets within that market more, creating demand. The second thing that you have to analyze is the industry, or the actual storage facilities, competitors, operators within that market. To understand the industry, we want to look at first what's existing, where it's at, and who they are. So when we're in our market, we've already looked that we like the population growth, we like the income. We want to zoom in and we want to look at these individual players or self-storage facilities, okay? What we're looking for is we're looking for how long they've been there. We're looking at size, but also placement, right? You can see, okay, we see where storage facilities are placed. Maybe we want to look at growth, see where there's not storage facilities. We want to really take a look at the location of these facilities. Now, one thing that a lot of people forget is that it's not only current assets that you're looking for, because that can paint a very skewed picture. Let me show you. Right now, we look and we have 11 square feet per capita in my 3-mile radius of self-storage facilities. and storage operators. We may say, oh, that seems a little high, but with how much it's growing, right, it may not be a big deal. But we also have to look at upcoming storage facilities. Look at that. In our 3-mile radius, storage facilities that are planning or under construction now has almost doubled the amount of storage facilities on this map and completely covered areas where other storage facilities weren't existing. And when we come down and look at the impact of that impact, these new storage facilities takes it from 11 square feet to 25.9 square feet per capita. So that's square footage of rentable storage to how many people are living there. We over doubled the amount of storage per person. This also calculates the growth of the population. So that's with those growth numbers that we loved. At first look, that immediately says, whoa, there's a lot of storage coming on board. And with that growth rate, is it really sustainable, right? Can this market really hold that much of an increase in this 3-mile radius? The third thing is utilization. How are the customers utilizing those assets within that market, which ties it all together? Let's take a look at the storage facilities. We have the market, it's rising, income's rising, population, the existing storage facilities. What we want to look at is the utilization of them in the market. So I'm going to look at and analyze competition. What I'm really looking for is what their rates are doing, who they are they sophisticated operators, and what the occupancy has been. Is there enough demand to really fuel this market? First, I notice an immediately glaring gap in this market. This is all units. This is saved for climate controlled. By looking at this, I immediately find there are no climate controlled units in that 3-mile radius. Okay, that tells me something. There's probably demand for climate controlled. Upon inspection of them, I'm seeing the individual assets and I'm looking at their units. I want to see if they've gone up or gone down in pricing, meaning what is the range of these size units within these assets. At the bottom, I'm looking at the aggregate, right? So the total of the square footage and revenue. So how much are these individual units getting per square foot a year and month? That's a really important part. We can also look at specials that they may be running and what unit size they're running specials on. This can help us know if any size unit is having a lack of demand. This feature is hard to really tell and understand in this market because there's not as many storage facilities. What we're looking for though is the range of rates. What this tells me is in this market, all these storage facilities are charging right within the same range. There's no outliers. There's no ones that are performing at a certain level and one that are charging much, much higher rates. So they're all pretty much in line. All right, when we look at a bigger market that has more storage facilities in it as opposed to that 3-mile radius, what we can see when we're looking at monthly prices by features or dimensions, year over year change in the rates, what we're trying to see here is we're trying to look at overall trends. You have to be careful to look at this and say, oh, they all went straight down. The reason being is markets like Reno and a lot of northern markets are cyclical. So if you take it during the winter or the slow months, it goes down. The question is, does it bounce back up? And we can look at that as we look at the overall time frame. What I'm really trying to identify with rates in markets, if I'm acquiring or building, is the spread. Meaning, what is the high rate and what is the low rate? And why is there a spread? Is it a spread because this operator is better? Is it location? Is it offering? What is this causing this spread? A $65 to a $329 spread is a big spread. The asset that I'm buying or the area that I'm in what price can I charge? And when we look at this, we can tell utilization of the individuals or the customers within those assets. Is there way more demand for these products and way less for these? What is driving those revenues? What is the overall demand on these units and what can I charge? Now, once again, I have a breakdown of competitors like Public Storage, which is a very large REIT, to other storage facilities that may not be public REITs. They may be smaller storage facilities, but are still placing their prices. Generally speaking, we only have prices on this. Maybe that means that they have no other inventory. There's no other units for sale except this one. Now, these rates are great. These numbers are good. I can see our prices going up. What's the mid-level? So what's the lowest that was sold? What's the highest? And this gives me a really good idea of units and the market and how they're working together to form different demand. Every single unit is a product and has different demands within different economies. We want to look and analyze every single unit by itself to understand its demand within that market. But this cannot tell you everything. The best way to really see utilization of the inventory in that market is on the ground. Looking, secret shopping, looking at the facilities, its quality, its condition, talk to the manager, look at their online website, figure out what occupancy is, what prices are they, how efficient are these people running, and how much demand is there? Do they have waiting lines? What units are the most demand in that area? Most of that we find out through on the ground work, just hitting the roads and really evaluating what's happening in that industry. Okay, so the question is, what do I think of this market? Well, first of all, when we look at our radius here and we look at the market, these are the things that I like, meaning the market's growing in both population and income. It's a healthy market. We like that. When I look at the storage facilities that are existing, I like one aspect that there tends to be a huge piece of this city that is completely being avoided. Now, the thing that I really didn't like about this market on the actual storage facilities that were in it were the rates were all very much in line. I didn't see a big spread, which drum up a lot of questions in there. Are they just lazy? Is there no one that's outperforming? It just gives me a hard time to understand revenues and where we can be pricing within the market. It wasn't a deal breaker, right? But I didn't like to see it. The new inventory. So 11 square feet to 25.7 square feet per capita. There's no way I am buying a storage facility that is doubling the square footage per capita in its market, because at that percentage, I don't know if that market can handle it or not. That was a deal breaker for me, both in building and acquiring. If I'm acquiring a really high-priced asset in a market that is being flooded, I have to adjust everything from occupancies, revenues to compensate for it. That is a deal breaker. Radius is a great tool that helps you with market analysis. It's important to remember, though, they do not have all the information and you need to be on the ground. You need to be out there seeing what's happening within that market. If you want to know what makes a good market, which ones are being successful, and how to find it, check out this video and we do an in-depth dive on finding markets and analyzing them.